Hey, good morning, traders and investors. Keep in mind, if you like this morning content, hit the like, subscribe, check the bell so you get notified. And I'm thinking about doing some live when the market opens or the market closes videos and just analyze things and answer some questions along the way. Let me know what you think of that. But anyways, make sure you subscribe if you're not subscribed, and let's jump into the charts. There is a bounce in the equities. We are seeing the index is up on average about 8% this morning. We have lots of volatility on the markets. This is what happens. We have big pops and drops in the market, lots of volatility in terms of we don't know which way it's going, and any gaps are going to be bigger than normal just because volatility is increased. So overall, we're kind of waiting for this market to bottom. We don't know where the bottom is, and it looks like it's trying to find a bid this morning and move higher. It's Friday. Weekly closes are very strong on the weekly chart, so it's always interesting to see how the market's going to close for the week. Again, we are going to have a couple of different things. We do have a little bit of panic selling, a couple of little bouts of panic selling yesterday. In yesterday's session, we saw the panic selling both kind of kick in right near these lows on the SP 500, which usually tells us short term we should see a bounce. Everybody's running for the fences and trying to take cover and selling their positions. Usually that means we're going to see a bit of a bounce. And that's what we've got this morning. You can see the futures chart. We're set to open up about 1% on here, 1.3% on the NASDAQ. But gaps, as we know, get sold into. So it will be interesting to see if sellers step in and unload and keep dumping shares today and sell into this buying pressure, or if there's going to be a big short squeeze and we start to see this market have a bounce and rally, which I have been kind of anticipating for a little while. But this is why we don't want to pick a bottom, because the downtrend is in place and the odds are a trend is more likely to continue than it is to reverse. So trying to pick against the trend is not a good scenario in the long run. So we'll just let things shake out. Not a whole lot really changing. We are seeing gold, silver, and miners starting to run, which is no big surprise. We've been talking about gold hitting 3050, so it is in striking distance of that potentially today or the next couple of trading sessions. It's breaking back out and moving up as people get nervous. Money's flowing out of stocks. It's going into these defensive plays. Silver is coming up, having a pretty nice push over the last couple of sessions, getting back up to this 35 area. If we just zoom out on the big chart of silver, we can see here, overall, I'm not a huge fan of price charts that go up, have a sharp pullback, hit a new high, have a sharp pullback, and the market's likely going to hit another nominal new high and could have another big pullback. This could turn into 3 surges to a high, which usually leads to a very big correction. But overall, it is in a short-term uptrend. It is pushing up past the high from a few weeks ago and trying to run up in the striking distance. Maybe it's going to blow off all the way up to around 3750, which is this spike that we saw back over here. Right now, it is also still under this significant spike that we saw back in 2012, which is around 3540, somewhere in that range. And of course, we can see that from this previous high right over here, that this is going to act as a resistance area. We could see a bout of selling hit it again once it does tag up or poke to a nominal new high. So we'll see how silver unfolds. In terms of miners, if we take a look at gold miners, which I like more, they've got a nice chart pattern, nice big move there yesterday. They are set to open higher again today, and they're going to take a run for this previous high as well. So again, the precious metal space is that one that's been more or less favored. It's in that area that we're in this market condition and stage timing where it tends to hold its value or move up. Gold is obviously the safest play. Miners, if you can catch the right swings and moves, which require a little more timing, then they have some good opportunity to make money. But the easier money is just gold, which keeps pushing to new all-time highs. And you don't have to go through these 15-20% roller coasters and wait months and hope it comes back to recent highs. If we take a look over at energy, we have oil up 1%. It has what looks to be, could be a little bit of a bear flag. We've had a drop. We've got a bit of a bear flag here. Depending where we want to start this line, we could say it goes all the way to here. Anyways, it is trying to hold support around the 65 area. If this little bear flag fails and it starts to break down, it's going to wreak havoc, I think, on the indexes. I think there's a lot of big energy stocks carry a lot of weighting, and we could see them do a lot of damage, especially to energy stocks. If we look at XLE, Let's just zoom out a bit here. XLE has been constantly making a series of higher lows and higher highs. Now it's more so making sideways, kind of more or less stage 2, stage 3. And if it starts to break down, we're going to be going down into a decline, a stage 4 for the space, and it could unwind pretty quick. So anyways, I'm interested in this space. I kind of like this as a potential high speculative play with an inverse ETF. Not looking to do it just yet, but it is on my radar, and I might stick my toe in the water. These are kind of those opportunities, just like our Bitcoin one, where these massive chart patterns unfold. And it's like, you know what? It's just too good to resist for a little bit of money just to put to work for a couple things. Satisfy the trading urge, the itch that we all have. And also, it's just a big pattern that has potential. It might break down first to the 80 and come back up, but overall, it has potential to, I think, drop very easily to that level, which is about a 28% drop. And it could even go more than that. And this could happen very quickly in a 2-3 week window or month period, depending on how things unfold. And of course, the inverse ETF is 2x. So obviously, there's a lot of juice that there's potential when all this kind of unfolds, if it unfolds. Don't go picking a top here, because you never know. This market could just take off, and it's best just to stick with the trends and wait for big trend reversals of very nice looking patterns that are going to have lots of these pivot lows that are going to create triggers of waterfall selling, panic selling. All right, let's see what else we have. Bonds are down today, so stocks up, bonds down. Bonds have gone from a bunch of bearish patterns to now more or less it's rallied, it's kind of pulled back. We've got moving averages crossing over. It's pushed up. It's got a nice little kind of fade and pullback, somewhat controlled. I like it. I think bonds are trying to carve out a bottom. We can see here on the 30-minute chart, it has dipped into oversold territory a couple times. Each time it dips into kind of this oversold territory, we do see some type of bounce. And they are going to pull back a little bit today, roughly around towards the 20-day moving average. But again, the overall trend is still sideways at best. Again, when we look at this, pretty clear that the trend is put in a blow off top, it's broken down, and now I think it's carved out a bottom. I think now it's bottoming in terms of it still needs time to build a base, a launch pad for it to start another bullish environment, but it's coming around. It does feel like it's coming around. A lot of these red bars are selling spikes. Now we got a pretty big green bar, a couple green bars of buying spikes, so I think the momentum is shifting. But again, not jumping into anything just yet. Looking over at the hot list, we do have a few new triggers. We've got COPEX has got a new trigger saying it's got some momentum to the upside. Overall, I don't really like it. It's long term. You can see this is in a downtrend. It's under key moving averages. Moving averages are crisscrossing. The shorter terms really sideways. So I'm not a fan of COPEX miners, even though they have a bit of momentum. You can see there's still kind of money flowing out of them. The downtrend is out. They're kind of in a recovery phase. GLD, which is gold, is really the strongest of them all, pushing to new all-time highs again. Risk on, meaning people are piling money into gold. The long-term trend is bullish. The short-term trend is up, and it has a no momentum signal to the upside. Again, I don't believe there's a ton of upside in gold right here. Simply 3,050 is the next target that we have. So we got a percent or two to the upside, but it is definitely a strong, secure asset. And then gold miners and silver miners both had triggers 6 days ago, 2 days ago, and they're pushing and moving up. And of course, the short-term trends are up, and they are kind of an accumulation bullish phase, moving higher. So these are kind of the only spots that are kind of interesting. Utilities do have they're a pretty ugly looking chart. They've been holding their value fairly well, but in the grand scheme of things, they've kind of really fallen out of bed in the last week and a half. And I'm not a fan of the overall chart pattern. So I know we're looking at utilities as potentially being something interesting, but to me, it has really gone dormant. I'm not too interested in that. If we go and take a look over at the mags real quick here, if we take a look at the Magnificent 7 ETF, it has been hit pretty hard. It is set to open up this morning. It's going to gap higher. The big question is, does today's gap get sold into? Most likely. We are going from panic selling yesterday, which generally causes people to bargain hunters to step in, drive the price up shortly after, which is going to happen at the open today. So it'll be interesting to see how this goes. But I would expect today's pop to probably get sold back into. But again, it is a real crapshoot. This is for not only the mags, but the general indexes. Right now, it's a coin toss. Does the gap get sold into, or do we have a big short squeeze and move up? This is not the time to really be dabbling in the market. I think this is a time to kind of just watch and learn and realize how random the market is when volatility, when everybody thinks and feels the bottom is in, and they for some reason think that this is a good trade. This is probably a good opportunity to step aside and be like, okay, I realize how volatile and choppy this is and how it really is a coin toss when we get into this type of scenario. As much as when the market rebounds and takes off later, everybody will be like, oh, I knew it was a bottom, but people thought it was a bottom here. They thought it was a bottom here. They thought it was a bottom here. They thought it was a bottom here. And it's not as easy. People quickly forget that they felt this all the way down, even if it bounces all the way up here. Now, I'm just pointing at the mags, but this is the same for the SP 500 and the NASDAQ. Say it rips higher up to the 50-day. They'll be like, oh, I knew it was a bottom. But the reality is most people already started positioning themselves here. We saw this in all the different, with options, with everything. They also started positioning here. They also bought more here. And some of them potentially bought here, or they finally gave up, took their loss from all of these and said, I got to get out. And then the market rebounds. And even if you did buy right here and we get this huge 11% recovery, you really just break even, or you make a little bit, but you had to suffer a lot. And if the bottom kept falling or keeps falling out, you're going to suffer a hell of a lot more, because for all you know, this might not come back to this level for 5 or 6 years from now. That's what people don't want to look forward to in time and realize that that is the reality of what could happen. Anyway, that's it for today. Not a whole lot going on, and it's really just sit back and watch everybody flip and flop their shares and watch their portfolios kind of go all over the place while we kind of just watch from our armchair and relax. Take care. Bye-bye.